Hello everyone. This is the pre-market report video for today, 5th July 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Let's quickly discuss what happened yesterday in the Indian market and then we will discuss about what we can expect today. Nifty opened 50 points gap up and in the first hour it crossed the 24,400 mark. However, it then dropped back to the opening level 24,350 and the sell-off in the final hour erased all the day's gains and closed around flat 24,300. Then looking at the individual stock contributions, it was very much evenly split. 24 stocks contributed positively while 26 stocks had a negative impact. Here, HDFC Bank was the top negative contributor, 60 points, but that was offsetted by ICICI Bank and Infosys. Both the stocks reached the fresh all-time high value. Regarding the IT stocks' positive performance, we discussed in detail in the last video. Slight dovish comments from the FOMC meeting minutes and weak labor market data both increased the CME Fed monitoring tools probability of interest rate cut in the next FOMC meeting to above 70%. This rate cut expectation supported the Indian IT stocks. As far as the mixed momentum in banks, there's no clear fundamental reason for why HDFC Bank was down over 2% while ICICI Bank was up 2%. Some might say that HDFC Bank's recent run-up led the people to book profits kind of. However, I'm not buying that. Last Tuesday, we know HDFC Bank closed positive and all other banks closed negative. Interestingly, then in the night, HDFC Bank released their shareholding pattern. This is really making me wonder whether some investors already knows about it. Then again yesterday, HDFC Bank shares dropped over 2%. Now after the market close similar to Tuesday, HDFC Bank released their quarterly provisional numbers, which I personally view that as negative, which we'll discuss in a moment. But my point is, how come for the 2 days in a week, HDFC Bank stock price reacted prior to its data release? Anyway, I don't want to speculate and it's not in our control. But what in our control is analyzing those quarterly provisional numbers. First of all, HDFC Bank's both deposit and credit growth were higher than the RBI's overall country's average, which seems positive. Year over year, deposits grew by 24.4%, almost double the RBI's average bank growth rate, 12.6%, which is very positive if you see this value alone. However, the issue was in the balance between deposits and loans. Credit was grown very much crazy, substantial 52.6% compared to the RBI's bank average 19.2%. Only on last Wednesday, RBI cautioned all the Indian banks and requested them to maintain the balance between deposit and credit growth. Ideally, if credit increases by 10%, deposit should also grow by about 10%. Here, HDFC Bank data was completely opposite and very much unbalanced. Credits grew by 52.6%, but deposits grown only 24.2%. This level of imbalance could lead to serious liquidity issues and also could impact its net interest margins. That's the first major concern. Second, both credit and deposits grew year over year, but when you look at its quarter over quarter data, deposits actually declined by 0.03% and credit growth also declined by 0.8%. This sequential fall is clearly not ideal. Third and very important, the CASA ratio, current and savings account ratio to the total deposits, fell to 36.3% in the June end from 38.3% a quarter ago. We have discussed this multiple times on this channel, how a higher CASA ratio means cheaper funds for the bank, which improves its valuation. But in my opinion, 2% drop in one quarter is a significant negative. So overall, according to me, the HDFC Bank's quarterly provisional number is not good, but I'm not sure how market will react to this. Either way, HDFC Bank will be on focus today. In addition, IDBI Bank, RBL Bank and Punjab National Bank also released their quarterly provisional numbers, so these banks also will be on focus. If I explain each and every bank's number individually means it will be super boring, so I will update that in the text format at the channel's community tab. If required, please have a go. Just one thing, other than HDFC Bank, all other banks grown more or less balanced. Moving on, for Reliance Industries, there were two significant developments yesterday. One, Reliance Industries executives mentioned that Jio has developed a smart TV based on Google's Android platform, which they plan to launch during Diwali. Second, Morgan Stanley released a statement predicting that in the next few years, Reliance could add another 100 billion US dollars to its market cap. Here, as far as Reliance concerns, both news looks positive to me. Maybe like how yesterday ICICI Bank supported the market, maybe today Reliance might support. Let's see. Other than that, early this morning at 3 a.m. Indian Standard Time, GIFT Nifty closed at 24,358. Compared to the spot market, this suggests a potential gap down opening of 50 to 70 points. Regarding institutional activity, for the second consecutive day, FIs were net buyers. The net bought for 2,575 crore rupees. In contrast, DIs were net sellers. The net sold for 2,375 crore rupees worth of stocks. As a summary, last night there was no US market, so the global momentum has somewhat paused. Currently, US future market have just opened and are trading flat to slightly negative. In line with that, GIFT Nifty is indicating a potential gap down opening of 50 to 70 points. In addition, as we discussed earlier, all the banks will be in focus today. Please note, ICICI Bank, SBI and Axis Bank have not yet released their quarterly provisional numbers. The only major bank that has released its numbers so far is HDFC Bank. Moving on, regarding stock open interest, Ramco Cement, JK Cement, Bandhan Bank, Bajaj Finance, Tech Mahindra and Wipro got an increase in open interest with a negative close, indicates the short build-up. On the other hand, Lupin, Metropolis, Atul Auto, Zydus Life Science and Muthoot Finance got an increase in open interest with a positive price close, indicating the long build-up. About the things to look out. First, before the market opening, several Japanese macroeconomic indicators are due, whereas for during market trade, I'm not aware of any specific indicators. However, in the night, very important for US, government non-farm jobs data, unemployment rate and average hourly earnings increase data are some of the important items we need to keep an eye out today. One more thing, today UK government's general election results. As per exit poll, after 15 years, Labour Party expects to form the government with majority. Suppose if hung parliament happen means, then that will deteriorate the global momentum. Coming to technical, as we discussed, Nifty opened gap up and crossed 24,400 for the first time. However, it failed to hold and closed flat around 24,300. Thus, on the daily chart, Nifty formed a bearish candlestick pattern with a minor upper shadow, indicating a lack of momentum at higher level. Despite this, Nifty continued its trend and formed higher high and higher low with positive bias in RSI and MACD momentum indicators. However, the hourly momentum indicator showed negative divergence and a bearish crossover, signaling a potential slowdown. Therefore, we might see some consolidation for the short term. Immediate support is at 24,200 with more crucial support at 24,000, and the zone 24,400 to 24,500 will act as a resistance. In case of Bank Nifty, it opened 160 points gap up and reached a new high 53,360. However, selling at higher levels erased all and closed flat at around 53,100. Thus, on the daily chart, similar to Nifty, Bank Nifty also formed a bearish candlestick pattern but continued its higher high higher low formation, indicating that the overall trend is positive. Regarding the weekly options data, the maximum call option open interest was at 25,000 strike, followed by 24,500 and 24,300, with maximum new call option writing at same place in the similar sequence. Whereas on the put side, the maximum open interest was at 23,000 strike, followed by 24,000 and 23,500, with maximum new put option writing at 23,000 strike and then 23,500 and 24,000. Thus, from options data, 24,500 is expected to be the resistance with the immediate support at 24,000. So that's all in this video. Hope you all got some useful information. Please consider subscribing this channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.